There we go. Yep, we'll, all right, welcome everybody. We're gonna get started here in just a couple of minutes. This is Dave DeBow with our host with the most, Aaron Bellmore. We're gonna be talking about the COVID situation, Alberta real estate, and where Aaron sees things going over the next 5 years. So welcome, we'll get started here in just a minute. I see we got all sorts of folks coming on. Go ahead, just do me a favor if you would, you guys, and type in the question box, just say hi, where you're calling in from, so that we can give you a little shout out and we can make sure that all systems are go with the question box. So again, type in your name, where you're calling in from, and we'll say hi just to make sure we got all systems go. John from Edmonton. Hey, welcome, John. There's a lot more people on the call than just John. Come on, you guys. Let's practice using the question box because we're going to open this up for Q&A as well. So we might as well get practiced up here. So we got John from Edmonton, Les from Courtney. Welcome, Les. Nick from Grand Prairie. So just up the street from where, or down the street from where Aaron is right now. All right, welcome everybody. And Aaron, you're in beautiful Grand Prairie right now. How are things up north?
Oh, it's not bad. Nice blue sunny skies today. The snow is melting. So yeah, spring should be in the air for northern Alberta soon. And yeah, still trucks on the road, so little activity out there.
That's good. All right, you guys. So this is going to be a fairly short and sweet presentation, unless you're particularly chatty. So again, welcome if you're just coming on board. My name's Dave DeBow, and I'm going to be helping Aaron with the presentation here tonight, just kind of taking care of some of the techie stuff. I've known Aaron for many, many years now, been working with him, helping him with some marketing stuff for the last couple of years. And I'm also an investor with Aaron in a couple of different projects up in Grand Prairie. So what we're doing here today is just kind of taking you through, nobody's got the perfect crystal ball, but taking you through what Aaron thinks is going to be going on, what is, giving an update on what is going on right now and where he sees things going short term, medium term, and long term. So Aaron, glad you're on the call here right now, and you're up taking care of business in Grand Prairie. Let's do this just to keep everything on track time-wise. I'm going to kind of introduce Aaron, although everybody on the call already knows him, but just to give you a little bit of background and let you know where it's at, and then we'll jump in. And feel free anytime you want to type in a question in the question box, and I will ask it for you on to Aaron, all right, on your behalf. So Aaron is a very, very successful real estate entrepreneur. He's been doing this for a lot of years. He's been recognized by the Real Estate Investment Network multiple times on multiple occurrences with multiple awards. So he's an award-winning real estate entrepreneur. And what I love about Aaron is he's really got it dialed in. He's not one of these guys that's doing a whole bunch of different things. He's focusing on one strategy. He's focusing on one market, and he's doing very, very well with that. So Aaron focuses on furnished rentals. So taking a property and increasing the income of that property exponentially because he furnishes them and he rents them out short term, medium term. So we're not talking about Airbnb here. We're talking more like medium term housing. So in the range of 3 to 6 months is typically what the sweet spot is. And Aaron first got started with this with single family homes. He's got many of those, which he rents out by the room. And he's also got multifamily properties on the go as well. So at this time, and correct me if I'm wrong here, Aaron, I think you're at over 42 properties and over 100 units and like 260 some bedrooms that you're renting out. Is that correct?
Yeah, it's pretty close. Yeah, we've got a few more in the works as we speak.
They're always growing that as well. So what are we going to be talking about here today? Aaron's going to be talking about where he sees the current real estate market in Alberta and specifically in Grand Prairie. We're going to take a quick little look through real estate versus stocks. we'll take a look at the long-term outlook for real estate investing, especially up in Grand Prairie, and also at what Aaron's path is going to be. So we'll be opening things up for Q&A at the end of this. So again, anytime you got a question, feel free to type in the question box, but I'll probably open it up for Q&A at the end, so that we keep on track time-wise. So Aaron, why don't you just take us through this slide, where things are at, the bad news, and then we'll take a look at the not so bad news on the next slide.
Sure. Yeah. Well, as most of you know, if you do watch the news, there's a lot going on at the moment, and in Alberta specifically, we've been kind of on a bit of a grind for the last few years, but this year with this lockdown, travel restrictions, and health concerns, our COVID pandemic, we're seeing a lot of uncertainty, which is just causing everything to be a little slower, I guess, than normal for this time of year. The oil prices are down, and basically there's a lot of challenges specifically for Albertans in regards to getting to work and keeping things going. So we're just at the beginning of this right now, and yeah, the time will tell. The months to come, and we'll see what happens. But there's also a lot of opportunity kind of inside of that.
Yeah. So the other side of the coin is, it's not that misery loves company, but we're definitely the whole Western world is in the same situation. Everything's in lockdown. So why don't you tell us a little bit about some of the not so bad news?
Yeah, well, I can't speak for all of Alberta, but in Grand Prairie here and the surrounding areas, there are some projects that are a go, and that's still, dependent on a few things, but there's enough, I guess, activity in the pipeline, so to speak, here that's going to keep people moving to this area, those who live here working. And again, there's always going to be, in times like this, wage reductions, cuts, and situations that might postpone or might even delay certain projects. But some of the ones listed below here are certainly, been waiting for approvals for a long time, and we're at that point now. So a couple good things, to throw in the mix with, the list of negativity or challenges that are in the headlines at the moment.
So Aaron, before we pressed play here, you and I were having a little chat, and you were telling me that right now you're up in Grand Prairie, you're taking care of business, you're very hands-on right now, and you're seeing people moving into your units all the time right now. It's not business as usual, but it's still a lot more active than I would have thought it is. So tell me a little bit about that. And yesterday you were telling me about one example of somebody's business going under, turning into more business for other people, and that turning into business for you. So tell us a little bit about that.
Sure. Yeah, I've been here for a week and a half now, and actually I've kind of been hands-on with the property management. I've been hands-on with the maintenance, and just trying to make sure everything's efficient. We're not spending anything that we don't need to, but we're doing what we got to ensure we can accept people that are looking for properties, places to stay, places to isolate. And I've moved somebody in every single day. A couple days I've had multiple move-ins, but yeah, we've been just figuring out exactly who's doing what and connecting as much as we can there. Yesterday I had a company out of Edmonton who does subdivisions. They put in the power lines and the poles and the lights and the services, and the owner paid for 2 full houses. It's only for a month each, but it's still keeping things moving at those locations. And he said, yeah, his competition who does this area had just gone under, and they're looking to capture some of the market up here. And then, there's been different projects that are a go. Everybody, is kind of working until the day that they might get told that they're not. So our terms are even more flexible than normal. But we've been able to find those locations and as my other good friend says, who's moving in the spider web, and getting them to come and connect with us, and just adjusting what we have to. So yeah, it's and even I myself am surprised. I thought it was going to be just a fire hose of people moving out, and we'd be sitting here twiddling our thumbs. But every day I've had inquiries. Every day we've had move-ins, and we just continue to do what we can once we got somebody connecting with us to find the right fit for them at the right price based on their circumstance as well. So
Yeah, well, that's one of the beautiful things is how fast you and your team can modify as needed depending on the situation. I mean, one of the advantages is this isn't your first rodeo when it comes to a downturn in the economy. I think this is like your third go around where things haven't been ideal rental rise. So you definitely know how to bob and weave and pivot when needed.
we get a little stronger every time. One doesn't welcome the downturns, but if you can survive them, that's where the long term, really starts to shine. So it's.
I think you've already survived a couple of big ones. You've come out stronger than ever, and I think that's what really makes the difference between somebody who knows what the hell they're doing and an amateur. So let's go along, you guys, and right now what I want to do, and what Aaron wanted to show you is just kind of compare and contrast real estate as an investment vehicle versus other choices out there. So, the big other choice for many people is taking their money and investing in stocks or mutual funds, and basically they all go in the same place, which is the stock market. And some of the big challenges there are, you've seen it, right? I mean, the values went down 30% in one day when this whole COVID thing was happening. Now it's gone back up and down. It's all over the place. But bottom line is, the stock market is a damn scary place to be for most investors because it is so volatile. I was just reading yesterday that way back in the 80s, after some fluctuation in whenever the heck it was, the early 80s or something like that, they put in what they call circuit breakers. So that is, automatically the markets will shut down if there's panic selling below a certain amount. So the market shut down for, I believe, 15 minutes to let people kind of calm down a little bit, and then they open up again. And that circuit breaker, even through 2008 and the whole bit, that circuit breaker was only tripped one time since 1987. It was only been flipped. It only went off one time since 1987. However, it tripped 4 times this March alone, which is mind-boggling. So, it's a classic case of emotion. People, especially amateur investors, tend to buy when everybody's buying, so they buy very high, and then they get freaked out. And when the market starts going down, they sell. So they buy high and they sell low, and that's why most people lose a lot of money in the stock market. It's such a volatile thing. So why don't you tell us, Aaron, a little bit about why you think real estate is the vehicle that just makes a lot more sense, not just for you, not just for your investor partners, but for everybody?
Well, if I was relying on the stock market to pay my bills, I think that'd be really stressful. I don't think you could consistently, unless you had a lot of money in there. And certainly, this is a time where if you do have extra funds, you could be buying stocks at an all-time low and getting involved. But you're right, the majority of people do wait until it's the top of the market for that comfort. And when it comes to real estate, I guess I've always said one of the pros and cons is the liquidity, and that's a concern for people if they do need money at a certain point. But it really is a benefit. If things are moving around and getting a little bit uncertain, you can't exactly just pull up and leave. You've got to make some prearranged plans to sell that property, to get it ready, and you're not typically going to even be able to pull out when you might be freaked out. So staying the course and simply covering your bills gives you a pretty skookum ROI, return on investment, even when the market or the values of the properties, the rental market might be moving a little bit. You're still, based on the power of leverage, going to see a substantial return on investment, even on the worst days.
Well, we'll talk about profit centers in a second here, buddy, but tell us a little bit about your impression of real estate, like just as an investment.
Oh, well, it's just so much more tangible. There's something you can physically see and touch, and you can say, you have just an endless amount of control over the situation versus zero control in the stocks. So I really, that's my biggest thing. I take responsibility for my finances and for the people that are trusting me as well. And so the fact that we have that control and we can do what it takes, but we can buy at the right time. We can buy the right properties based on our plan. We don't have to be emotional and reactive. It can be very strategic, and simply staying the course. And these downturns, are part of the long-term strategy. You can't be naive and think it's not going to happen, because it happens, and it certainly will again. But it's being prepared and committed, to stay the course, and then you'll see those profit centers add up. And I think it's a lot more reliable, and certainly something that everyone is going to need, a roof over their head. So there's ways to adjust if needed, but at the end of the day, it's a fairly simple, sometimes work intensive, but controllable situation, and I like that. Gives me more comfort.
One of the things I love about real estate too is, especially compared to stocks, is the valuation, especially of your multifamily properties, is really based on the profitability of the property, right? So stocks, everybody freaks out. The stock market drops 30% in one day. That's the value of the stocks. It's not based on anything logical. It's based on mass greed or mass panic typically. But real estate, especially your multifamily properties, the value is based on the profitability. And that is something that you, especially with what you do, Aaron, you have a lot more control over. And plus, now we'll talk about the profit centers here. So stocks and bonds and mutual funds, there's maybe one or two ways that most people can create wealth or income from that. And the main way is the increase in value. So hoping that the value of the stocks goes up. That's the main way people make money from. If you've got preferred stocks and things like that, then there might be a small dividend that's paid out on them as well. But with real estate, especially the way that you do it, Aaron, long-term buy and hold, especially with the furnished suite strategy, there are multiple different profit centers. So let's talk about the first one. And so first of all, tell us what instant equity is, and do you think there's going to be more opportunity or less for this post-COVID?
Well, instant equity is basically when you're purchasing a property for less than market value. And that could be for multiple reasons. The seller might be motivated or in a situation where they have to sell. Maybe they've had it for a long time and they're, fine selling below market just to get out. They've made their money. And maybe you just negotiate very well and you come in and, you give them an offer they can't refuse, but darn well that the property is worth a lot more. So day one, you got some instant equity by negotiating and finding the right deals in the right market. And so a little example right there, of course, that apartment building. I'm not sure if anybody that's invested in that one's on the call, but you can see our sign out front there and it's shining bright. And yeah, we bought that building. It was empty. So as a multifamily unit, if there's no revenue, then the value is a lot less. And this was a very motivated oil field company that was using this for their own staff housing. So we bought this, we got all the furniture. They tried to settle around 750 and then we just kept going down to 700 there. So, but we furnished that immediately and started increasing the value.
So leverage is another huge profit center with real estate. So what does that mean to you, Aaron? What does leverage mean?
Well, with leverage to me is two things. One is the bank. So you can buy property for 20-25% down, sometimes 30, and then you're using the bank's money to purchase the rest of the property. However, if the property appreciates, which they typically do, you get to capture the profit from all of that. You don't have to share that with the bank. So you get 4 times the value for your appreciation by only putting in a quarter of the down payment. So, and then the other, the other side of leverage is the fact that you can leverage other people's experience. You can leverage other people's money. You can work together and leverage each other's skills to buy property. You know, I don't have to have all the money to continue buying more. I don't have to have all of the skills, and neither do other people, right? Some people might not want to be involved with the management. So we leverage each other and work together, and then everybody can benefit.
All right. So this is something that you definitely bring to the table with your properties. So tell us a little bit about one of the appreciation areas, which is forced appreciation.
Yeah, so as you said earlier, it could be in the management or it could be in the renovations. And so forced appreciation, is like, when people flip a property or they just simply renovate it. This example here, we had this house for many years and the basement was unfinished. So finally, my partner and I, we split the cost and we finished this basement. And in my world, we get paid per bedroom. So we had 2 more bedrooms and a bathroom. And at the time we were getting $900 per room. So we got instantly an extra $1,800, without seeing the expenses fluctuate, except for the renovation costs, of course. But, it's a fantastic way to come in. Maybe somebody has deferred all their maintenance for, 10 years and you can come in, you get a good deal based on market value, and you put some money into that property and off you go. The next person comes along or the appraiser and sees it at a higher valuation. And of course,
this is the profit center that is so beautiful with your furnished suite strategy. It's all about the cash flow. So for the same building, you're able to get literally 4, 5, 6, sometimes 10 times the cash flow of that same property unfurnished. So talk to us a little bit about how that works, just very briefly.
Yeah, well, I mean, we're basically including all of the utilities and they're fully furnished. So we're going to be charging, obviously, for all of that. The other thing that we do to increase the monthly revenue is offer flexible terms. So people going, month to month because they're not sure how their job might go. And we charge a premium for that. This is a bit of an older slide. But this property here we've had for a number of years. I actually did a creative purchase with the seller originally, and then I've got 2 partners here on this property, and we've been working with this one to keep it moving along, just like all the other ones. But it's this is a 7-bedroom house, so when things are going really good, then this one's really rocking. And we're
so just to give people a bit of perspective, this house, if it were rented as a normal rental, unfurnished, you'd be lucky if you cash flowed anything at all, quite frankly, right? So maybe $200 or $300 a month cash flow as an unfurnished rental. But when times are going good, this one's pulling in over $2,300 a month in cash flow. So literally, this could be 10 times the cash flow of the same property unfurnished, just because of the strategy. All right, now here is a beautiful one, especially for your long-term buy and hold strategy, Aaron. So just very briefly explain what principal pay down means.
This is basically the portion of your mortgage that reduces the debt. So you got a mortgage payment, there's principal and there's interest, and regardless, again, whether you're cash flowing or not, just by paying down your mortgage, you're profitable. That money's coming from a tenant, it's not coming from you. So your customers are are putting money into your savings account every single month just by making the mortgage payments. And I personally love this profit center because it's one of those ones for the patient, the slow and steady and the delayed gratification. And yeah, before you know it, the years go by and you look back and there's some substantial equity. And of course, the markets can fluctuate a bit, but we certainly, this is what you get paid for having the endurance and the quality of management to keep going through any market.
And then market appreciation. This is this is something that we're not going to see probably right now. So right now, the market's probably flat. It might even go down for a while. But again, it all gets back to that perspective, that long-term perspective. If you're looking at things over a 10, 15, 20-year time frame, then blips like this really don't make any difference, because real estate is cyclical, and real estate, it goes up over time if you buy right and in the right areas. And then talk a little bit, just very briefly, because this is kind of, more in the realm of accountants, but what does depreciation mean for a lot of your investors? How are they able to take advantage of that?
Yeah, so again, that's totally an accountant conversation. But if when you're doing your taxes at the end of the year and I send you a report that shows profit, you can depreciate. And that's just a percentage, that's from Revenue Canada. And if you choose to, it's very much like an RSP. So you can defer the taxes on those payments by depreciating, because essentially a building is getting older and it's, going to need maintenance. And that's just the way that they look at it. So I really like that, actually, because as a small business owner, when you offset and don't pay any taxes because you have the opportunity to with your expenses, you go to the bank and they'll say, well, you don't make any money and you can't finance anything, or we can't lend you anything. But as a real estate investor, you can depreciate to offset that, but they factor that back in for your debt service because they know it's
You're already getting too complicated, buddy.
Well, anyhow, it's great because you can depreciate, offset your taxes with real estate and still qualify.
Yeah, beautiful. All right, and then reinvestment, you guys. This is just an example of, instead of taking the profits you make from one of the deals with Aaron and going and blowing it on a new truck or blowing it on a nice vacation or whatever, reinvest those profits in another deal and start having your money make money for you. So let's quickly jump into, what is the plan moving ahead? We've kind of alluded to this, and we already talked about the fact that, this isn't Aaron's first go around when it comes to a recession. Back in the day when he was first getting into real estate, things went into a bit of a recession. And then, things rock and rolled for a few years and then went into another recession. And things were just kind of really starting to climb out of things, out of the doldrums, and this whole COVID thing has hit. We don't know if that's going to lead to a recession in Alberta or not, but some people say yes, some people say no. Who knows? We'll see. But if it does, the good news is it's nothing new for Aaron as it would be for somebody who's brand new into the whole thing. So tell us a little bit about what your plans are, Aaron. How do you see things going, and what are you planning to do with your portfolio?
Yeah, well, thanks. First and foremost, we are going to make sure our existing properties are well maintained and bills are covered. So we're playing a little bit of defense at the moment. We're all working together, and we've contracted on our expenses to ensure that we can stay the course with these. I really feel like things haven't moved a whole lot since 2008, little up, little down, like you said there in the last slide. And so anything that we have still purchased in the last while, it may go down a little bit, but I think compared to most major cities, we are at the bottom still already. So there isn't going to be any drastic losses in regards to values in that. And I was already looking at doing some more projects here and some other properties in the area. And obviously I kind of pulled back on those offers when this started to happen, and I'm going to wait a little bit. But I've been getting emails and texts from the realtors already, you know, with reduced purchase prices on these buildings that I already felt were, you know, significantly of good value. And you know, I'm definitely going to once I get that comfort zone, I guess, of our defensive game here, I'll be revisiting a lot of that and the opportunities, you know, that people might, you know, regardless, be looking to get out of their properties. So
Yeah, there's going to be a lot of motivated sellers, I think, like we talked about earlier. And one of the things I think, big strengths that you bring to the table is the experience and the management. The fact that, you know, you live on Vancouver Island, all of these properties are up in Grand Prairie, but that doesn't matter. First of all, you go up when you need to go up. And second of all, the really big thing is you got a whole team up there working full time on this. You've got your own in-house property management team. So tell us a little bit about that and the impact that has for you and your portfolio.
certainly, yeah. No, we operate 7 days a week. We're available to move somebody in. We're available for maintenance and anything that comes up. It's definitely really important to me that they've, you know, the customers, the guests feel like they get the value, but the properties are also being maintained because we are thinking long term. So, you know, we don't defer maintenance, but we, you know, try to do things efficiently and keep up on them regularly so it doesn't build up. And yeah, the team that I have right now, I'd say, is stronger than ever. You know, they've been with me for quite a while, and yeah, we're just kind of working, yeah, splitting up, you know, the hours and things like that, so that we can all keep moving and do what we got to do for this. But certainly, at the end of the day, it all rests on my shoulders. But I've got amazing people with such good attitudes, you know, and I haven't even called up once and heard any negativity from them. You know, a little bit of concern, and you know, they've got things going on in their own worlds. You know, kids are out of school, and you know, they're wondering what's going on at daycare. But otherwise, we're definitely, and I can help them with that as well. I know a lot of people in this area, but yeah, we're pretty solid right now. And yeah, I've been working with them for the week and a half here, like side by side, and yeah, it's been such a pleasure, you know, to be able to say that they, you know, are also willing to do what it takes, and they've got the right attitude. So we'll make it through.
Yeah, it's a good team. Now, you guys, we're going to be wrapping up here in about the next 5 minutes. So if you have any questions about anything that we've gone over so far, please feel free to type them in the question box, or, you know, you can type them when we get to that part. But one of the things that I really appreciate that you've done over the years, Aaron, is the fact that you are able to be flexible, right, depending on what happens with the time. So I think that's a lesson that you learned early on, kind of getting into the business in the middle of a recession and then going through another one, how to pivot, how to bob and weave. So briefly, just tell us a little bit about how that looks in your world, right?
Well, what comes to mind first is actually the insurance. So we have the right insurance, full disclosure with the insurance company on how we operate. So we can adjust from short-term, long-term, crew housing, you know, employee housing, Airbnb. Yeah, we don't, you know, we don't have to call them up and say, hey, we're changing our management style or our tenant profile. We just got some really awesome insurance that allows us to operate this way. And so if for some reason we don't have somebody lining up for the property when it's coming available, but we've got, say, a handful of guys that want to rent rooms individually, we can rent out, you know, 2 or 3 of those rooms and get some revenue going in that property versus sitting empty for a month. Or we can adjust the prices. We can pull out, you know, some of the expenses that are included, you know, and pass them back. And we have a lot of negotiating power that way. You know, sometimes when we're getting top dollar, we include cleaning because we like to have biweekly cleaning in our properties so we can see and know and not let it build up. But if we have to pull that out and just say, hey, you got to clean your own, then that's fine. We can still inspect them and make sure that they're doing okay. But we do have that ability to adjust, and it's great because you can rent the whole house for a week, or rent the whole house out for 1 month, or whatever comes along. And
whatever needs to happen, you can make it happen. You can pivot on a dime kind of thing. So we're going to wrap things up here, you guys, and let's take a look at where the opportunities lie. So, Aaron, are you thinking? Well, you already mentioned it, but just reiterate this. Why you think this is going to be a really good time to actually buy more properties when everybody else is freaking out and the amateurs are selling? Why do you think this is a good time to buy?
Okay, well, if you're going to buy in any area, you need to have some basic economic understanding of that area. So I'm going to speak again about Grand Prairie, and when I move into other locations, we'll do the same work for those areas. But you want to touch on GDP, and you want to know if the employment in that area is going to be sufficient to keep your rentals full. So this area here, I wish actually I had a picture of that new hospital. I mean, that hospital alone is giving this town a future. It's a massive project that is going to be finished in hopefully about a year. But regardless, this area, and even right now, is still proving this, that the bad days, still are just as good, if not better, than the average across Canada. And so any area that you're looking to invest in, decide, what's your game plan? Is this a long-term or a short-term? And for me, I'm pretty much dedicated to long-term. I like the fundamentals of real estate. I like paying down the mortgage and staying the course until the appreciation kicks in. So the opportunities in this area are the same as they were before COVID, and they'll be even better after, because there's going to be a lot of people that don't have that endurance, or have already been through the ringer enough times that they don't want to keep going. But it is a very young town. All the infrastructure here is done, and the economic checklist hits on all the little notes. And so this specific area, and other places in Alberta, I'm sure, will continue to do good. And if you're paying attention, you'll be able to spot the good deals, and connect with the people who aren't interested in carrying on. And you can basically do them a service by purchasing their property. And I mean, I mostly, no matter what, you're always going to buy property for market value. It's going to be based on condition. It's going to be based on the timing. And so those that are looking to sell and that are not looking to continue on in this area, I'll be connecting with them. And I know quite a few opportunities already. As I mentioned earlier, they're texting me and emailing me, and I'm trying not to be, I guess, like a low baller. I don't want to get that, I want to make sure that they, get the value that they deserve, but we're going to be also getting the value we deserve at the same time, as we pick up these properties, and continue on through the uncertainty, and into the times where this area fills up, and becomes a little bit more established, as a city that's not going anywhere. But from what I can see, and all the infrastructure and the businesses that are still coming to the area, this is definitely at the bottom, and it's definitely got a future, and I'm going to be a part of it.
We got some questions coming in here. So again, you guys, if you have any questions, now's the time to type them in the question box. So we got there's several questions from Lindsay. Thanks, buddy. We'll answer these here. So the first question is, with oil so low, won't there be lots of layoffs? Last time the vacancy went way over 10%.
Certainly, yeah. 2015-16, we were at 18% vacancy in Grand Prairie, and the rental rates definitely dropped 30%. So you could add that together, and you're almost at 50%, which is kind of scary. But I was expecting to feel something like that when I got here. And there is already a ton of layoffs.
So tell us, how did you manage in those times?
Yeah, well, we basically, adjusted our prices and improved our marketing, not only our marketing, but our sales. And literally we're visiting and finding, the job sites that are working. Through that last one, this area had a lot of projects that were still going, and they kept the locals working. And there was a small temptation. So one of my plan C's is to unfurnish a property, rent it out to a family, and just carry on. But you're typically going to be negative cash flow in that situation in these markets. So I didn't have to do that. We were able to continue operating fully furnished, all included, and we could pull our prices down to the point where we're still cash flowing. And just like I said, you had to be really flexible and understanding for the people coming to work, knowing that they don't have a certainty either. So not locking them into long-term leases and allowing them to come and go, and basically just doing 2-3 times the amount of work in the sales side of things to get people in. And then once they're in,
it's all about hustling, right? You gotta hustle. You gotta hustle. Okay, so Lindsay's saying if the Kitimat LNG goes through, how much will that help Grande Prairie?
Well, that's huge. I mean, that's huge for sure. So that's going to keep every town between here and the Yukon rocking and rolling. But the Grande Prairie area is the hub of the North. We already get basically the surrounding 250 to 350,000 people between Edmonton and the Yukon that come to Grande Prairie for all their services. And as that hospital completes, we'll see that increase as well. But yeah, if the LNG really starts to take off, which I'm pretty sure it is, they say it's a little bit behind, but we're going to be filled right up. There'll be all kinds of businesses and head offices and things like that continuing to move to this area. So you're going to see Grande Prairie hear a little bit more about it for sure as that gets off and these pipelines also start to get constructed. Well, they are already under construction, but.
So Les has got a question here. Have you got your eye on some specific properties right now in Grande Prairie?
Yeah, there's a handful of plexes that I'm looking at. So there's a couple of fourplexes that I was negotiating on, and I'm going to continue to do so. And then there's another fella who's looking to sell quite a substantial size portfolio that he has built up over the years, and I'm hoping that I can take a majority of that off their hands. It's really good quality, and it fits our model, which is 20 years or younger, so that we can keep them for 20 years and sell them before they're 50. So those properties I'm definitely going to keep looking at, and then we are in the process of getting permits and raising the capital for a development. So again, I do see a future here, and I am focusing on offering a larger opportunity to people as well in regards to that project, which will be on the south side, an ideal location for the large projects that are already underway.
All right, perfect, you guys. So good questions, everybody. If you have any more, now's the time. Otherwise, we're going to be wrapping up. And Aaron, if people, some of the folks on the call are current investors, other people are folks that are just kind of thinking about whether, it makes sense or not to invest in real estate, whether it makes sense or not to invest in Grande Prairie. Are you open to having conversations with folks if they reach out to you?
Certainly, yeah. Well, I'd love to chat and, just share a little bit more detail on all of this really, but buy low and sell high, but manage for cash flow in the middle. That's what we do.
Perfect. So if you'd like to get a hold of Aaron, just reach out, send him a text or give him a call on his cell phone, 250-218-9398. And Aaron, yeah, thank you very much for taking a little while here today just to give us an update on how you see things going.
Yeah, certainly. Yeah, reach out if you need to, and I wish you all the best. I appreciate your help, Dave.
Awesome. All right, everybody. Unless you got any other questions, we're going to wrap things up. Thank you very much for tuning in, and we will see you next time. All right, take care.
Take care. Bye-bye.
Bye-bye.